Hello everyone, welcome back to another Calgary real estate market update. So today we're going to be talking about what makes Calgary's market different than the rest of the country. There won't be charts, graphs and barely any data. This month's market update will be quick and to the point, yet full of everything you need to know right now about Greater Calgary real estate market. Let's start off by talking about the elephant in the room. Interest rates. Yes, in their infinite wisdom, the Bank of Canada once again increased its overnight lending rate by another 50 basis points. So this means that for the typical Calgary home buyer purchasing an average benchmark price home of $525,000, it will now cost them the price of a Starbucks latte more per day to own their next property. It is not the end of the world, but it is an addition of $160 or so per month will adjust for some people's buying power as the result. That is something none of us wants to continue seeing unnecessarily. And this opens the question, will this continue? I was asked this particular question just yesterday. And we will see another bump. Right now, it seems that there are just as many camps suggesting that yes, another increase is needed, as they're saying it is the time to pause now and allow the consumer price index to show the months to come how much those increases have truly dropped. This remains to be seen. But okay, let's take a look at real estate results from the month of October. We will start with the sales summary. So here is the deal. Sales are down, no questions. When we compare to October 2021, our real estate board reports we are down by a full 15% year over year. This amount of change could be cause for concern without proper context. So let me give it to you. Last year we experienced the highest selling month of October ever in Calgary's history. It was equal to a full 35% higher than a long-term average. So no surprise that this month we are lower than the best-selling October ever. And look into the situation even closer. Despite being down 15% comparing to the last year, we are still finding ourselves 15% ahead of a long-term average. So this is a case where context really helps tell the true sales story. Now, one thing to note here is that there is a tale of two sales markets. There is the detached and semi-detached market, and there is the apartment and row home market. Sales for detached and semi-detached have had decline in numbers, with about 30% pullback from the last year, while rows and apartments are continuing to sell significantly more than the past year, up to 18 and 20% respectively. The pace at which apartments and rows are selling right now are above levels we have ever seen in our history. So hang on tight if you are in those two markets to buy or sell. And one more thing I feel it's equally important. Overall Calgary sales month to month have barely adjusted at all. Despite the buyer pessimism, the interest rate hikes and the pending recession, we have yet to see a seasonal slowdown. I think we sold about 40 fewer homes in October than in September. That is absolutely negligible. So I will sum up the sales summary in two things. Things remain positive on demand front. People want to buy homes. And under category of it depends. Property type and price range details are required for you to make the most educated decision for a family's buying and selling needs. Alright, let's talk about the inventory right now. While the sales story is a tale of two markets, inventory has just one major story. Inventory remains down all across the board. So we are seeing that numbers of new listings coming to market is equal to or considerably lower than the last year. As a result of sales continuing to maintain the steam and new listings coming to market continuing to lag, we end up in a market where the total amount of available homes to purchase is becoming extremely low. Right now we have a record low amount of available properties to buy for any October in the city's history. This amounts to 20% reduction from the last year and 31% lower than the long-term average. That is a big time drop, guys. But it is not even across the board. The lower the price point of homes, the less inventory we have. This makes the below average price points highly competitive right now. Let me explain this a little bit further before we talk about pricing. So we determine the pace of our market in a few ways. The one of them is ratio of sale to new listings that come to market. So, like I said before, the higher the ratio, the faster and the tighter the market is. So guess where we sit right now? Citywide, we are 85%. If you remember back from my market updates from the peak of the time in the spring, this is nearly equivalent to that time. Detached, semis and apartments sit right at 83%. But raw homes, listen this, raw homes are at 106%. So what does that mean? That means that there are more sales happening, that there are new listings coming to market. So we are selling more, depleting number of homes to view each and every day. Any way you look at it, this remains a high buyer demand market. In order to further explain this, I did one graph. Okay, I know I said no graphs, but I still did one. Looking at this months of supply versus the price range graph, you will see that not only there are different top property types acting differently, but the different price ranges are as well. So months of supply means that if we stopped listing any new homes on the market, how long it would take to sell everything we have. The lower the number, the tighter and more competitive the market is. You will see that months of supply for everything under 600,000 is under 2 months. And as the price climbs, it goes up to 4 months right now for homes above $1 million. 2 months of supply is seller's market territory in a favor of sellers. And 4 months is a buyer's market, obviously in a favor of buyers. So, as much as I wanted to make things simple, because the market is acting differently among the various segments, it does take a wee bit of explaining to get my point across. So let's finish up with the pricing picture. You can probably assume where the market data is going to point us to, because our pricing always follow the supply and demand fundamentals. With sales staying steady, with active homes on the market dropping, the positive pressure remains in our greater Calgary marketplace. When this happens, it provides us with a stability in our pricing, which simply means, once again, no crash is happening here. As a whole, month over month, we saw 3,500 adjustment downwards in our benchmark price across all October sales versus September. That again is a relatively insignificant and negligible. Looking further back, we only adjusted 4% from the market peak, not even by as much as $20,000. That is in vast contrast to other major Canadian markets of Toronto and Vancouver, when they are seeing pricing slide by the hundreds of thousands of dollars, and in some cases all back to pre-COVID pricing, erasing 2 years of hype price growth. So you're gonna ask me, why are they dropping like a rock while we are floating like a boat? Well, there are a few reasons for that. Number one reason is that they hypergrew for years and years and years. It was overinflated, fueled by things other than economic fundamentals, and now they're paying the price. Reason number two is that our market slowly creeped out of a dismissal half-decade on the back of the true economic fundamentals driven by supply and demand, and not speculation in the market. Obviously, Calgarians are not immune to the recessionary times coming to Canada, but our real estate market is the battle-tested and ready to hold its own among the best of North America. Even the naysayers are now saying that we will come out of it just fine. So do I have some advice for you right now? Well, of course I do. I always do. So there is absolutely no reason to delay your life plans as a result of any concerns regarding Calgary real estate market. If you need to buy, do it. If you can afford it and want to buy, do it. If you want to invest proudly in a greater Calgary. By the way, I'm not sure if you read the article, but Calgary was in a top 3 cities to invest in a real estate. If you need to sell, feel confident. The market is there looking for you. If you need to tighten up your personal balance sheet out of concerns that talk about recession as economic uncertainty in your situation, you will have no problem taking the necessary real estate adjustments to better serve your family needs. With all of the panic out there, don't let real estate be the thing that concerns you. Well, thank you for watching, and I hope this helped. And if you ever need more granular or specific advice for your personal situation, please don't hesitate to reach out. Have a great month.